Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range, and so far it has been holding above yesterday's micro bull bear zone. Now heading into the open, our intermediate term bias will continue to be bearish, and our short-term bias will be neutral. And on the downside, we'll be using 42.29 to 38 as the initial support, as well as the micro bull bear. In the event that buyers hold ES above that area, that would be a sign of continued stability, and a break and hold below the micro bull bear and initial support would be an intraday bearish indication, which can then take ES down into 42.15 to 20, where buyers can be active. But if the market is putting in a balanced breakdown below initial support on broad market weakness and sustained downside momentum, then keep in mind that the bias is bearish below that area, and the market does not have to stop at 42.15 to 20, and we could quite easily expand the range into 4200 half to 07 half, where buyers can be active on first test. But with our short-term bias being neutral, we will have to assess the real-time situation to determine whether it's worthwhile to attempt a long even at 4200 half to 07 half, because if the market is selling off on broad market weakness and big and sustained downside momentum, then given that our directional bias would be bearish below initial support, we just need to exercise caution on the long side, and the market could end up heading lower, and a break and hold below 4200 half would serve as an intraday bearish confirmation, which could then result in a push down into 41.92 to 96, as well as yesterday's RTH low at 41.82 half to 85 half. And a break below 41.82 half would just further confirm the intraday weakness, and that can then result in hitting the open gap at 41.80 quarter, and then we'll have support at 41.72 to 76 and better support at 41.57 to 66, where buyers are likely to defend on first test, and by that point in time the market would begin to exhaust the range potential of the day. So in the event that the market puts in a strong downside move below the micro bull bear, by the time ES reaches 41.57 to 66, it would have used up majority of the range potential of the day. And in the event that the market heads even lower, the 41.2475 to 36.75 is our larger time frame support, as well as a range extreme. Now, in order for that downside scenario to come into play, the market would first have to take out the 42.29 to 38 initial support. Lastly, as I covered in yesterday's recap, given that it's a Friday, it's the last day of the month, it is questionable whether the market will be able to put in a successful and high momentum breakout above 42.99 to 43.03 half. So we would need to see some very clear and obvious signs of intraday strength in order for us to trade on the long side above 42.99 to 43.03 half. And with our short-term bias being neutral, we are going to have to pay closer attention to how the market is developing in real time, and then give appropriate weight to that real-time intraday bias. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market deals with the 42.29 to 38 initial support. That's going to provide an early indication as to which side is in control, and we'll take it from there.